Hello, Anthony.
Hello, Claudine.
We're here to talk about a couple things, but they are related. We have an update on international practice units, and the IRS has launched something called campaigns. Basically, they're giving us a list of who they're going to go after to audit. So let's start with IPUs. We had done a video, I think last year, about international practice units. So just give me a quick outline of what an international practice unit is.
Well, the international practice unit isn't a unit of people, it's a unit of knowledge. And it's a different way the IRS has gone to get their scarce resources to try to collect as much money as they can or get in compliance. So international practice unit, it's not a group of people on a particular floor. It's just rather learning modules for auditors on how to identify issues and how to handle the issues. The IRS gives away this playbook. Mm-hmm. It's online. It's on irs.gov. So you can see all the international practice units that are there.
They're interesting. I mean, if you can sort of get through some of the junk in them to read, okay, this is exactly the steps you should take with the taxpayer. And I thought it was interesting, too. They say on a lot of them, okay, well, if you find out that the taxpayer is actually in compliance, wait 1 second, because there could be more.
That's right.
Okay, you found out they did file their FBAR, but did they file their 8938? So they give them tips on, oh, you didn't get them? Maybe you could get them this way.
Right. And so that's sort of, it's interesting because here you have an auditor, and the IRS does need to create these units so they have the knowledge. There was really a missing knowledge, but that the IRS auditors aren't expected to instinctively know this, to say, wait a second, I could clearly see you have a mistake on your return, but rather the auditors need to go through and find these technical things that the taxpayer is deficient on. So that's really the standard that we have, is something more than what an examiner would know.
Right.
You're required to know.
So last time we talked about IPUs, it was August of 2016. There were 124 different IPUs. Since then, they've added 21 more. A couple of interesting new ones. Monetary penalties for failure to timely file a complete and accurate Form 8865 Category 1 and 2 filers. That didn't surprise me. I was sort of waiting for them to add.
Yeah, and the reason why Claudine wasn't surprised at all is because, well, number one, she's a genius. Number two, the IRS was also on the lookout for 5471s. And so when we saw that, we knew the 8865, which relates to foreign corporations, would be forthcoming because they sort of go hand in hand with each other. They have some of the same penalties for not filing, the $10,000 per occurrence, and then the statute of limitations on the entire return is still open for additional assessment.
Another one, how to assess penalties for failure to file Form 8886 disclosing IRC 988 losses. And also this one, I don't like this one, self-employment taxes, U.S. citizens and resident aliens working abroad.
Yeah.
So they're going after the little guys again.
Well, I think this is a perfect example of what the landscape is for the person living abroad or has any interest outside the United States. Here we have LB&I. Did we even say what it is? We might have rushed through that. Large business and international. And it's a section of the IRS that handles large businesses and international. Well, large business, we could probably figure out some of those, right? Coca-Cola would be one, Google, some of those. And then they lump in this international. And when I first heard of that, do they mean large international?
Yeah,
large business and large international? No, the large is only modifying the business. International could be basically anybody with an international affair. So this is a perfect example. Self-employment taxes. So if you have self-employment taxes, you are not a large business. You are an individual working somewhere overseas, and that is what they're interested in getting, penalties on this. And you could see just how vicious, or let's just say vicious, let's just aggressive the IRS is, and getting all of its self-employment taxes from people who live and work overseas.
Okay. So we know now that IPUs are basically a training module. This is how you audit this particular situation. Now, as of January 31st, 2017, the IRS LB&I division came out with a list of what they call campaigns. It's 13 compliance issues that LB&I is focused on, and it lists the specific practice areas involved. So they're getting even, more aimed at this particular group. There's a list of 13. We'll go over a couple of the important ones. Deferred variable annuity reserves and life insurance reserves IIR campaign.
Yeah, that one is sort of alarming me. I'm wondering if our private placement life insurance, private annuity, because that's not really an issue a large life insurer is going to have. They're going to likely meet their reserves, so that's something to keep a lookout for. With PPLI, it is perhaps the best. Private placement life insurance is perhaps the best, if you can do it, tax avoidance scheme ever. However, there's some things you do, and the IRS would really love to get their hands on it, because you make one technical mistake, now there's a huge pot of money that the IRS can assess, and also they can collect it from.
Yep. A repatriation campaign.
Yes, repatriation. So when people are bringing their money back into the United States, a whole host of things you're alerted to. So here's the campaign. We're interested in people who are bringing money back into the United States. So whenever we see a large inbound wire from somewhere overseas, well, we want to know what was the cause. I'm trying to think of a situation where you have a large inbound wire and no tax reporting event has occurred, and there probably is, but most likely there is some reporting event that has occurred. One of them is if it's an inheritance, you had to file a Form 3520. So here it is. Oh, that's a good campaign to go, because maybe there's a 3520. And that's is that IPU up yet? I didn't check yet.
I'm not 100% sure.
But if it's not from that, maybe it's from a foreign partnership, the 8865. Maybe it's a foreign corporation, 5471. So that repatriation campaign can spider out a bunch of different IPUs that they have. So that one makes a ton of sense to do.
And it's so easy to do. Like you said, you look at wire transfers.
Wire transfers, yep. Explain this. So that's pretty interesting.
Another campaign is Form 1120F non-filer campaign. 1120F is U.S. income tax return of a foreign corporation.
Yes. So any U.S. sourced income, a foreign corporation has to pay taxes on it, and they do that with Form 1120F. So here's another one that really alerts to there might be a whole bunch of other reporting requirements going on. You could have a 5472 in there, fairly easy. There's also that $10,000 penalty. And then you could have transfers. If there's a U.S. related corporation there's a transfer to, there might be a Form 926 penalty. We have an IPU on that. So that's a great trigger for all of these IPUs. And that's really when I'm looking at these campaigns, how many IPUs fit into that? Because they're trying, this is, and we did listen to the IRS's webinar on
yeah,
this.
we'll get into that.
And we'll get into that. It's exciting stuff. But the IRS is dealing with a small amount of resources that they, they're down to 30, or they're down to 60%, 70% of what they used to have, yet they still have the same responsibilities. And so in a way, this is a pretty good way to come up with a system to maximize your resources. When I don't agree with the goal, but I agree that this would be a really good way to get the biggest bang for your buck, to go after high dollar things where there's a substantial likelihood you get paid, a huge likelihood someone made a technical error that has a very consequential penalty.
The last one we'll talk about, this one's big, OVDP declines and withdrawals. So somebody that was trying to enter the offshore voluntary disclosure program, and they decided to withdraw and maybe get into a different program? Is that one of the reasons you've seen that people would?
Well, in our case, we have a lot of people filed a pre-clearance letter, and we went streamlined with them, and we knew that the entire time. I don't think the IRS is really going after those people, because we talked to them to say, hey, look, you guys don't have a streamlined pre-clearance. They said use this instead, but really what they're looking for is people who started an OVDP and didn't quite follow up with it. Okay. Started something, or if submitted an incomplete streamlined disclosure, which is basically a lot of them. This right here, this OVDP decline withdrawal, should be huge. Or if I was running the IRS, this is what I would put way up there for priority, because of all the IPUs that you hit on with this. It's just pretty much any individual IPU you're going to get. Now, and this is sort of the difference when you think of bang for buck. We had some ex-IR examiners work for us, and when they're doing the large business part, there's not an auditor. Okay, there's a team. There is a team of people, of specialists, of technical. It's not just one person. So you can't just send, hey, go in there and see what you can get. So the IRS does a risk assessment to say, well, what are the resources that we're going to have to expend to what are we going to get?
Right.
Oh yeah, this big law firm is going to lawyer up, and so okay, let's try to figure something out, or they'll just go to appeals and they'll find a way to undo all of our hard work. So if you are LB&I, wouldn't you rather take maybe take some of your resources and go off after a little bit of softer targets?
Mm-hmm.
The soft target being the person who, all right, maybe I didn't do everything right, but it can't be that bad, right? And the person who's not going to immediately lawyer up, the person who might just think they can handle it and not really realize the IRS is out for blood. Here's everything that they've done to prove to you that they mean that they're really serious.
It's all listed on irs.gov.
It's right there, right? So you can't have too much anger against them. They're telling you we're out to get you here.
Yeah.
So those OVDP declines. So some of those we've seen are, and a lot of what we've seen is law firms, CPAs just dropping the ball, not getting stuff, or misadvising clients. And then sometimes you have clients who do pass away. So I'm sure there's going to be some audits on those. Those usually seal up pretty quickly. However, that estate might owe a tax. So if you are an administrator of someone's estate and you think they have that, you might want to finish it up and not just let it drop off, because that could affect your inheritance.
Gotcha.
Yeah.
So there is a webinar about this. It's an 8-part webinar. So far, part 1 has been done. And
that was part 1. Yeah,
yes.
It was.
And it was probably an hour long. And in it, all they did was talk in circles. They really didn't answer any questions. They were throwing around keywords like future state, the future state.
I heard agile once.
Yes, agile.
I did hear agile.
So now, we realized a few minutes in that the IRS webinar was being hosted by KPMG.
That's right.
One of the big 4.
That's right.
Is that like a conflict of interest, maybe?
Well, I mean, this is the collusion between the administrative state and the large 4 who make tons and billions of money off of the compliance initiatives. We know that, I don't know about KPMG, but we do know that Deloitte and PricewaterhouseCoopers have come out in favor of FATCA. Mm-hmm. They have come out in favor of it, and that just absolutely angers me, because there's nothing good that FATCA does. If you are actually concerned about the tax gap, you would notice that FATCA really doesn't address any of that, nor did it ever claim to be. Mm-hmm. Basically, it's a windfall for the compliance industry. So that is, this has always been going on. And they had Mike Dolan, ex-commissioner of the IRS, and that's really the game.
He works at KPMG now.
Right. So what you do is you work for the government to build up your cred, and now you possess all of this goodwill that's now in your possession. You were paid on the job, by the way. You were paid a handsome salary while you're a commissioner, but now you get to go outside and then now get paid by the private sector for all of your inside information. That's been going on forever, and I would have done it. So I just didn't get that opportunity. So that was certainly my plan, to sort of get to have the government pay, or the taxpayer pay, for my expertise, and then be able to capture that expertise in the private sector. So that's nothing new. I don't know if that's really ever going to go away. So my outrage on that is a little bit limited. When I was thinking about this, and we were listening to this webinar, we've listened to a few webinars over the years. Yeah. This was probably, and I mean no disrespect to anyone who was putting this on, and I think you'll listen to me and you'll see. Well, this is my analogy. You always have people who talk about being tough on crime. Like, okay, what we should do with criminals, if you're castrate you or beat you or put you in a prison cell and make prison so uncomfortable, so terrible. And these are always people who usually don't have anything to do with the criminal justice system. They're not there. They're not probation officers. They're not working in the courthouse. They're not prison guards.
Yeah.
So this always sort of now my older brother was a prison guard once.
Oh my God.
Yeah. And he just got out of the Army. So he's 5'10" and he's weighing 140 pounds. And he looked like a little boy. And so he was a prison guard, and it was fascinating, and it was like, so he was in the Army, so I learned all the Army slang, and then I learned all the prison slang, and I'm like 14, I have the best. It was great. And I was like, how hell do you have the balls to go into prison and do it? It's like, you just look, if you're there to start trouble, they're going to give it back to you. They have nothing to do all day long but to find your weak point. So you just give them a blank stare. You're just like, okay, sure, whatever. There's nothing they can do. They're not going to come after you unless they give you a reason. But that was because this was a level, kind of almost maximum security.
Oh, wow.
Almost max. Not where they had death row in Connecticut back then. And it was pretty rough. But now this is the thing. What if prison was a more vicious place where people were punished? Where people were punished more, where there really was no chance that you're going to be able to watch. Here's an aside. They used to have TV there. And do you remember the gorgeous ladies of wrestling?
Yes. Glow.
Glow. The prison went nuts when that was on. When Glow went on, he says, oh, man. So you had this great, well, prisoners shouldn't be able to watch Glow? We want to be hard on these prisoners. No. You want them to watch Glow. Why? Because if they act out, you take Glow away from them. So they're going to be very like, I got to watch Glow. I got to watch Glow. And I think that's sort of the same thing, that when people want to be tough on something, they're not thinking about the people who have to enforce it. And so that's where, as I'm listening to this, and people who want the IRS to tax people to death or do all this, you're not thinking about the people who actually have to do the enforcing, because that's where I'm sort of listening to I was listening to this webinar, and I don't think anybody there sounded the level of enthusiasm was nothing. It was negative charisma. Nobody really wanted to do it. It sounded like they have to do it.
Yeah. The two people that were there from the IRS answering questions were like, okay, so.
And that's just not to say these people aren't brilliant.
Oh, no.
Right? I'm nothing like that. But you're putting brilliant people in a vicious system where, look at what they're doing. Look at what they're doing. Okay, guys, we got to get the most bang from our buck. And so we're going to have to create these campaigns that relate to IPUs where we can get, maximize how much we can get from the taxpayers. And I would just say this, that have you ever done something that was really horrible, but you didn't, your brain wouldn't tell you how horrible it was till it's over? Yeah. I think we all have that defense mechanism. Most things you just sort of like, yeah, this is another day. This is another day. And then after it's over and you're safe, you can cry.
Can I play you my clip now?
Yes, please.
Okay, this is from the webinar.
Okay, Tina, we talked a little bit earlier about could you be fortunate enough to have a number of campaigns? If you're a taxpayer, could you have several? So something that comes up repeatedly and
waiting for the laughter, it never comes.
Yeah.
So what if a taxpayer is fortunate enough to be audited on several different things all at the same time? How do we handle that?
I'm going to say she was joking. I just have to believe that. I have to believe that.
There was no laughter. There was no.
And if you listen to that voice, that was a voice of defeat. This is my life. This is what I do. We get together and we talk about these things. And I've done, a lot of webinars, a lot of training webinars. The webinars, and we get a lot from CCH, our tax software. They do a fantastic job. Man, those guys are upbeat. Those guys are upbeat.
They can
and
take
they're
the most boring thing. And you're like, this is really fascinating.
They're right. It's the same topics. But from somebody on the private sector who's trying to save taxpayers.
So like us.
Right. It's incredible. Like, oh yeah, right on, man. But when you're on the IRS side, it's like, okay, so we're gonna try to find a lot of penalties here, and if they miss this, we have this way to get them penalties.
Yep. And then maybe we'll get lots more penalties after that one penalty, and then we'll have lots of penalties. All right. So if people are concerned that they are either, an IPU or, they feel like they could be targeted because of the campaigns, what do they do? What should they do?
Well, what should you do is I would definitely double check your tax team.
Almost do like your own personal audit.
Yeah, I would get, let's take a look how, what are your tax team's international chops? How good are they? You really need to know because it's coming. And if they're not familiar with IPUs, you better do something, because the IRS does publish your playbook. And this, I mean, the IPUs have helped us out a ton.
They really did. They answered a lot of questions.
And they've helped us out. Like, okay, we know what you're going to do. Isn't that wonderful when you know what your opposition is to their next move before they make it? Because the thing is they're sort of learning around. They're learning this. They're flipping around trying to figure it out. But if you know where they're going to go and you already have a response for it that might work out better for you, you're ahead of it. So I would say that's it. You know, that's really what you want to do, is make sure your tax teams has those international chops, international experience with these international audits, and realize, and I think you want them to, when you tell them that you have an international audit or something is going on, you want them to sort of have that look to say, okay, it's going to be okay. This is a serious situation. That's what you want. You don't want, oh, all right, yeah, we'll just sort of like stonewall them or something.
Or freak out. You don't want them to freak out either.
Yeah, you
oh
don't
my
want to
God,
freak
we're
out.
getting audited?
Right. It can be, it's a serious situation, but it can be dealt with. And the IRS does give the playbook. So just, you know, here it is. You didn't even have to dress up like a goat and sneak. Wasn't that the Brady Bunch? They stole the other team's playbook,
Oh,
but
they
then
did.
Greg had a moral dilemma about that. Good old Greg.
Right. Well, if you do need assistance, don't hesitate to contact us. It's 888-727-8796. You can also email info@irsmedic.com. We can let you know if we can help you out. IRSMedic.com has a ton of great information, so make sure you check out our blog. You can like and comment below and subscribe to our channel so you get more awesome tax updates. Thanks for watching.